I've been buying gold and silver the last few years, but to be more accurate, I've actually been buying so-called paper gold and silver, which means I've been buying gold and silver ETFs, exchange traded funds. So for gold, the one I was buying is a GLD Spider Gold Trust, and you can see it here for 5 years. Of course, especially in the last year, it's gone way up. Everybody's probably been hearing about gold. It's just gone crazy the last year, really in the last few months. But I've been buying GLD, and for silver, I've been buying SLV, iShares Silver Trust, and of course, silver's also been going up a lot the last few months. When I started buying these ETFs a few years ago, I did do some research, and I heard that people saying that they're not fully backed by physical metal, that these funds are both heavily stacked with so-called futures contracts. And here I've asked Google, I asked, is GLD really backed by 100% physical gold? And the AI overview says yes, Spider Gold Shares ETF GLD is backed by physical gold with 100% of its assets invested in gold bullion. The gold is held by custodians like JP Morgan Chase. The fund is audited with a public list of gold bars available for review. So I don't know what to believe with these ETFs. The same with SLV. I asked, is SLV really backed by 100% physical silver? And here it says, yes, SLV is designed to be 100% backed by physical silver bullion. Now, this does say, but this is a, quote, paper backing rather than direct ownership for investors. But then it says the fund holds physical silver in vaults, but owning SLV shares does not give you ownership of the physical metal itself. So I'm not sure what this means. It says paper backing rather than, well, I understand that I don't have direct ownership of any silver, but I guess the question is there really silver bars in a vault somewhere backing this ETF? And you just hear different things. And this tends to imply, yes, there's silver there, but a lot of people say, well, it's not really silver, it's silver contracts to buy silver. And so what if the silver is not available and all they have are the contracts to buy it? So that's the issue with these two ETFs. They're the biggest ones out there, but yet people say this about them. I don't know what's true. I really don't. I haven't read all the fine print about them. One thing that is for sure, though, with these two ETFs is if you own shares and you want the physical metal, you cannot trade your shares in for the physical metal. Like here for GLD, it says no physical delivery for most. Like I said, a few years ago, I started buying these ETFs and I thought, oh, heck, what's the big deal? I wasn't concerned about it. They're the biggest ETFs out there for gold and silver. I'm not going to worry about it. I'm sure it'll be okay. And so I did put some money in these ETFs. And then this last week, I don't know how many people heard about it, but all these stories started coming across the news of the great silver shortage, why prices are poised to break out again. Real silver shortage sparks historic rally as London lease rates soar. Silver flashes rare warning signal as physical market seizes up. Silver supply crisis in London. So it was all over the news last week that people are wanting physical silver immediately, and there's a shortage, and the silver is not there. And in fact, this term backwardation in silver started being thrown around last week, which is a market condition where the price for immediate delivery, the spot price, is higher than the price for future delivery. It's usually the opposite, and it says this is caused by a shortage of physical silver. So, like I said, a few years ago when I started buying these ETFs, I wasn't concerned. I thought, oh, that'll never happen. And then lo and behold, last week, it seems like there are concerns. There is a shortage. And so if ETFs out there, if really all they hold are contracts to buy gold and silver, and there's a shortage, which apparently can really happen, like it has, with kind of the rush on gold and silver we've been seeing the last few months. Everybody seems to want to buy now. So apparently, yeah, you can have a shortage. And so that got me a little concerned about those ETFs. And I started, I actually did more research. I had researched this several years ago. And so I knew there were ETFs that are supposedly really are backed by 100% physical metal. And I did identify those ETFs a few years ago, but in the last couple days, I started moving some of my holdings into those ETFs. And so the one for silver is the Sprott Physical Silver Trust. That's this PSLV. And of course, over 5 years, in the last year, it's just like the other silver ETFs. I mean, it's gone way up with silver, of course. And so this is the one I've been moving from SLV into this PSLV. I just do like a lateral move. I sell shares of SLV and then immediately buy shares of PSLV. And again, here's the fact sheet. It's the Sprott Physical Silver Trust. And it says here, fully allocated. The trust only holds fully allocated and unencumbered precious metals, no exceptions. So, and that's what people say, that supposedly this one is fully backed by real physical silver. And then it says that it's redeemable for metals. Unit holders have the ability to redeem their units for physical silver bullion on a monthly basis, subject to certain minimum requirements. And then there's a footnote. And if you scroll down and read footnote 1, it says, please see redemption of units in the prospectus for details. And I did take a quick look at that. This is the prospectus here, Sprott Physical Silver Trust. And if you scroll down to here, it says redemption of trust units for physical silver bullion. And it does explain here how you can do it. And I haven't read all of this, so I don't know. I'm just kind of skimming through it. But here it says redemption requests must be for amounts that are at least equivalent to the value of 10 good delivery bars for an integral multiple of 1 bar in excess thereof, bars, or an integral multiple of 1 bar in excess thereof. A good delivery bar weighs, it says here, usually approximately 1,000 troy ounces. And it does say here, since inception, 2,536,000 trust units have been redeemed for physical silver bullion. So they have done it. I don't think I'll ever actually redeem. I mean, I just don't see myself ever doing that. But I guess what I like is that you seem to be able to do it if you really want the physical metal for your shares. I mean, there is a process here. I'm sure it's expensive. Somewhere I read you got to pay for it all the delivery. And I'm sure there's tons of fees to actually do it. I don't think I'll ever do it, but I guess I feel comfortable with this ETF that they're willing to send you the metal. So I guess that means they're confident they're going to have it. That's my reasoning for shifting into this ETF. I asked Google here, I said, what's the main difference between SLV and PSLV? And it says the main difference is that Sprott Physical Silver Trust is designed for investors who want to be able to redeem shares for physical silver, while SLV is a liquid ETF that does not offer this physical redemption option. That's kind of the summary. Now, one question I had with that is that, well, I guess if PSLV has this feature, then it's probably got a high expense ratio. You probably pay for that option somehow. But it says down here under other considerations, cost, PSLV may have a lower expense ratio than SLV, although this can vary depending on the specific cost being compared. That's not a real definite answer, but it actually suggests that it may actually have a lower expense ratio. In other words, it doesn't seem like you're really paying more to have that option with the PSLV. For gold, I've been buying this one now, OUNZ, which is VanEck Merk Gold ETF, and it says that it does have the option to take physical delivery of gold. And so that's what I've heard about this fund, and it seems to be true. And in fact, this one, I think you actually, it probably is easier to actually take physical delivery. Here on their website, this is their VanEck website, OUNZ Merk Gold ETF. If you scroll down, they actually have a whole section here on taking delivery. And it says gold delivery as easy as 1, 2, 3. You file a delivery application, and then you work with your broker to submit your ETF shares. And then it says gold sent to investor. Here's the steps. You file delivery application, and then you work with your broker, and then it says physical gold will be delivered to a delivery applicant based on instructions in the delivery application. So I have heard that about this ETF, that it really is set up for you to take physical delivery of gold. Now, again, there's fees. I'm sure there's tons of fees. You just know there's costs involved, and it's probably not, if you really want physical delivery of gold, I'm sure there's cheaper ways to get it. Just go in buying physical gold. I doubt that this is a very efficient way to do it. But again, I don't ever intend, unless the world is really ending or something, I don't intend to ever really want physical delivery. Again, what I want is just to know it's there if I really want it to. It just makes me feel better about the ETF knowing that they supposedly do have the physical metal there if I want it in exchange for my shares. So again, I wondered, well, maybe this is a really high expense ratio fund because you have this delivery option. But again, I asked Google, it says the main difference in OUNZ is that OUNZ allows for physical delivery from your shares while GLD does not. And then it says GLD has a higher expense ratio of 0.40% compared to OUNZ with only 0.25%. So that kind of surprised me again. I mean, it's OUNZ like PSLV doesn't really seem to be higher. And in fact, it looks like it's a lower expense ratio. Now, the disadvantages with probably OUNZ, both of these OUNZ and PSLV, is they're much smaller ETFs. And so, like it says here, they're probably less liquid. This says that GLD offers higher liquidity and trading volume, and that's for sure. I mean, it's like the biggest one out there. Right here, net assets. OUNZ only has around $1.8 billion. GLD has $138 billion. So if you need to sell GLD, it's going to just sell instantly. I mean, there's so many people out there, and maybe OUNZ, it's going to take longer. I don't know. It's also, GLD's been around 10 years longer, 2004 versus 2014 for OUNZ. So I don't know. I bought shares of OUNZ. I haven't tried to sell any. And same with PSLV for silver. I've only bought. I haven't tried to sell. I haven't actually moved shares yet from GLD to OUNZ, but so I actually haven't sold any GLD either. But I did sell SLV to move to PSLV, and I mean, it was instant sale at market. I mean, it was just instantaneous. So there was no problem selling it. But I have not tried to sell PSLV or OUNZ, so I don't know if maybe that could take longer. But anyway, that's the reasons why I am now, as I buy more gold and silver, I'm no longer buying GLD and SLV. I'm only buying OUNZ and PSLV moving forward. I think I'm actually going to keep all 4 of the ETFs. I am moving some over to the physically backed ETFs, but I don't think I'm going to sell all of SLV and GLD. I'm going to keep some just to have things spread out a lot. So just to have a variety. So that's the way I'm approaching it. And of course, I should add a disclaimer here. I'm not an expert at all. I'm just a vlogger sharing my own experiences and opinions. And so nothing in this video is any type of financial advice or any other type of advice. And I may even have gotten some of the information wrong that I provided. If you found this video helpful, please press the like button. Thanks for watching.